So today we are going to start with some general entries of share capital, that is accounting for share capital. Firstly, we will see what is balance sheet of the company must comprise of. As we all know that it consists of equity and liabilities on one hand, and other side is consists of asset, and these both sides should have to be equivalent. So basically, in equity and liability side, we have shareholders fund that is consist of share capital, reserve and surplus. And if any money received against any warrant, that will be treated as shareholders funds. And these three things should be added up to find out shareholders fund. The next is share application money, pending allotment. If any money that is not received, still not received by applicants to the company, that will be also be a part of liability. Next is non-current liabilities, line long-term borrowings, deferred tax liabilities, other long-term liabilities, and long-term provisions. All these are the parts of non-current liabilities. In the current liabilities, that is short-term liability, short-term borrowings, trade payables, other current liabilities, and short-term provisions. On the other hand, asset side will consist of fixed assets, that is again classified into tangible asset, intangible asset, capital working process, intangible asset under development. Next is non-current investment, deferred tax assets, long-term loans and advances, and other non-current assets. Next, we have current assets, that is consists of current investments, inventories, trade receivables, cash and cash equivalents, short-term loans and advances, and other current assets. According to Companies Act 13, this is your form of balance sheet. This revised form of balance sheet that is came under Schedule 6. Next, we have issue of shares. When a company wishes to issue shares to public, there is a procedure, and this rules and procedure must be followed by the companies under the provision of Companies Act 2013. The money to be paid by subscribers can even be collected by the company in installment if it wishes. Let us take and the steps. Firstly, let's see what are the procedure that a company has to issue. The company has to follow while going for new shares issue. The first one is issue of prospectus. Before the issue of shares came into comes the issue of prospectus. Whenever you want to issue the new share, you have to issue the prospectus. Issuance of prospectus is very much necessary. This prospectus is basically like an invitation to the public to subscribe the shares of the company. A prospectus contain all the information of the company regarding its financial structure, previous balance sheet, the profit and loss statements of earlier years also. And it also states that the manner in which the capital collected will be spent when inviting deposits from the public at large. It is compulsory for the company to issue a prospectus or document in lieu of prospectus. They have to consider this step also, because it is very compulsory for them to issue the prospectus before issuing the shares. Next, we have receiving applications. In response to issue of prospectus, applications for subscription of shares are submitted by prospective shareholder to the company. The applicant is required to at least receive 5% of nominal value of the shares with the application and application money as per section 69 subsection 3. So whenever a company issues a prospectus, prospective investors can apply for shares. They must fill out an application and deposit the required application money in the scheduled bank mentioned in the prospectus. The application process can open a maximum 120 days. If in these 120 days minimum subscription has not been reached or received, then this issue will be cancelled. The application money must be refunded to investor within 130 days since issue of prospectus. So if a company did not receive any amount, any minimum subscription of the shares, they can refund the money within 130 days. Next is allotment of share. Once the minimum subscription has been reached, the shares can be allotted. Generally, there is always oversubscription of shares, so the allotment is done on pro rata basis. Letters of allotment are sent to those who have been allotted their shares. This result in valid contract between the company and the applicant, who will be part owner of the company. If any applications were rejected, letters of regret are sent to applicants. After the allotment, the company can collect the share capital as it is wishes in one or more in the installments. So after the last day of fixed for receipt of share capitals, the director of company will proceed to allot share. An application for share is an offer made by applicant and allotment thereof in pursuance of terms of application by the company for its acceptance. Next came issue of shares. A company can issue its share at par, a premium, or even a discount. If a company shares at par, that means they are selling their shares at nominal value or face value. Shares sold at a premium cost, that means it is more than nominal value, and the amount in excess of face value is the premium. And of course, shares sold at discount cost less than face nominal value. If you are selling your shares less than the par value, that means you are issuing your share at discount. Now the accounting treatment for all these issues will be slightly different. The money for these shares may also be collected in installments on the application allotment. For the first call, second and final call, the shares will be fully paid up only after the last installment has been called up. See, these shares actually issue in some procedure. Firstly, they apply for application, then allotment, and later on comes the first call, second call, or the subsequent calls till final calls. So next we have, if your application money, if you received application money, application of shares does not guarantee allotment of shares. Some applications will be rejected. So when the application money is received, we do not credit the share capital account. For the sake of convenience, we open a new account, that is share application account. I am going to remind you once again that we treated share capital account as their personal account. This money collected on application must be deposited in the bank account in scheduled bank according to the Companies Act. This account is exclusively open to the depositors to deposit their application money. The general entry for this particular transaction in the books of companies as follows. Firstly, let's see if we issue share at par. Par value means the nominal or notional or face value of the share which a company issued to its investors. Uh, in India, par value was fixed at rupees 10 to 100 through the government of India. So whenever you issue your shares at a notional value or at the face value, that means you are issuing share at par. There will be no premium, there will be no discount this value. A company can, however, issue shares above par value, that is a premium, or below par value, that is discount. So that means we can subscribe share capital through private placement as well as public placement. And if we talk about private placement, that means we are issuing our shares through some selected group of persons. That means the issuance of shares through only private placement means that we are offering some offer letter to some specific group of persons. And if we are actually using the strategy of public placement, that means that call is open for the general public, and anyone, any prospective shareholder can go for this particular investment. So let's see the general entry. Firstly, for when you receive the application money, that means bank account should be debited because you are receiving the money. Debit the receiver and credit the giver. And in this case, your application account will be our personal account. So we have to credit the giver, that is share capital account, and bank account should be debited because you are receiving the money. That means being share application amount received for shares at the rate, whatever rate has to be there. Again, I am showing you this thing. When you receive the application money, you have to debit the bank account to share capital account. Here also come with the bank account because the depositor has to deposit the money in the bank. You can't debit your entry with cash. Next, after the application of money comes the allotment of shares. After the company receives minimum subscription, it may start allotting the share. Once the shares are allotted, applications now become stakeholders in the company. Allotment means basically you can't give each and every shares to the every shareholders. You have to divide your shares among the shareholders on the pro rata basis. And if you receive subscription of share capital more than that, it means you are having over subscription, and if you receive less, that means you are under subscription. So once the shareholders receive the application's money, when you allot the shares to them, that means they become stakeholders of your company. They get into contract with the company. Let's see general entries passed the books of account, the books of company in the event of allotment. The first step is that money received on the application for share now can finally be transferred to share capital account since now the allotment has been made. Let's see the entries for allotment of shares. Share application account must be debited to share capital account. That means the money has been transferred from the share application to share capital account whenever you allotted money to the shareholders. Next, you have if additional amount is payable by any stakeholder on allotment, and if the allotment was done on the pro rata basis, the excess capital application money must be taken into account. But instead of refunding this money, such entry will be made. If you receive any excess amount for the shareholders on allotment, or you have done allotment on the pro rata basis, that means you have to adjust that particular money. So instead of refunding it, you adjust that money in the call as per first call, second call, third call. To share allotment account should be debited to share capital account if you have to adjust any money for subsequent calls. Next, you have receipt of allotment money due. If you received any allotment money which was due, then you have to bank account debited to share allotment account. Next, you have there will be case that certain applications were rejected for some specific reasons. In that case, application must be refunded within the stipulated time frame. The entry will be the same. Share application account debited because you are giving in this particular, you are receiver to bank account. You are paying your amount, you have to credit it. Share application account debited to bank account. Next, we have then the final entry of these stages will be allotment money becoming due and finally being paid by allottees. We will pass two entries for a better judgment understanding of this process, but we can also say that one entry can also pass instead of two. The entry will be share allotment account debited to share capital account. Next, you have making calls on shares. So whenever after the allotment of the shares, you have to go for the calls. It can be first call, second call, or final call. If the shares are not fully paid up at the time of allotment, then several calls can be made until the shares are fully paid up. However, no call can exceed 25% of nominal value of shares, and there must be at least 1 month between two calls. That means you have to actually go with the gap of 2 months between two calls. So the entry for each and every call will be share first or share second call or share third call. These are should be debited to share capital account. Receipt of call money, and if you receive these call monies, that means bank account debited to share first, second, third, and final call. Let's go with the example first to pass this general entries. Example, Sanyam Limited offered to public on 1st 10 2021 80,000 equity shares of ₹20 each at par payable full on application. Applications were received for all the shares by the 15th Jan 2021 and shares were allotted on 20th Jan 2021. You have to pass the general entries. So for this purpose, our first entry will be for January 15. Entry will be because you are actually receiving application money. The first entry will be passed by bank account The initial entry which we have done, bank account debited with the amount that is 80,000 at 20, that is 16 lakh, rupees 16 lakh to equity share application account. The amount will be same, that is 16 lakh. And later on we will write down the narration, that is being application money received on 80,000 equity shares at rupees 20 each. This is how you write your first entry. This is your format when you receive your application money, and you have to write your first entry like bank account debited to equity share application account. Next is, because applications were received till 15th Jan and the shares were allotted at 20th Jan, so we have to pass also allotment entry with the allotment, that is January 20 equity share application account debit with amount will be same, to equity share application account. So to equity share capital account with the same amount. So narration will be being transfer of application money to share capital account on allotment. These two entries will be passed for this particular sum. Again, I am repeating, on 15 Jan, the money was received, that is bank account debited to equity share application account with the amount that is 80,000 into 20, that will be 16 lakh. And for 20th Jan, they have allotted their application, that means equity share application account, the equity share capital account with the same amount of money, that is 16 lakh. So example 9 will be CR limited in white applications for 25,000 equity shares of rupees 10 each. It demanded 10% of the face value application, 60% on allotment, and remaining on final call. So CR Limited have invited the application. They had actually issued 25,000 equity share at rupees 10, and they have demanded the application money will be like 10% on the time of application, 60% on the balance on allotment, and the remaining on the final call. So now we have to pass the general entries and application were received for equal number of shares. So there will be no pro rata basis, and we have to pass the new entries in the normal manner. So let's see, we have to go with the books of CR Limited. We have to follow the set pattern, books of CR Limited. Journal. Date. Particulars. Laboratorio. Debit. Plus and credit. Okay, fine. So their first entry we have to pass because they received their money in their bank account. The first entry that should be passed, that is bank account debit to equity share application account. Bank account debit. Debit to equity share application account. This is share application account. Bank account debit to equity share application account because they have actually received money on 25,000 at rupees 1 per share. At rupees 1 per share. 25,000. So you have to write here the cash has been received, the application money received on 25,000 equity shares at rupees 1 because the share price of the share price are rupees 10 and it would be like 10% on their application. It will be your rupees 1 because they have told that they will actually have 10% on rupees 10 at the time of application. So they have 10 of 10%, that is rupees 1. So the bank account eligible to the application with 25,000 into 1. Next, they have allotted the money, and for allotment, what they do, equity share application account, equity share application account, debit to equity share capital account. Equity share application account debited to equity share capital account, being transfer of application money to equity share capital, being transfer of application money, that will be the same amount 25,000. So the same amount we will debit this, that is 25,000. The next step will be allotment, equity share allotment account to equity share capital, equity share allotment account to equity share capital. Now they have said that we want to issue equity share allotment at 60% of balance of allotment. That is 10 plus 60% is rupees 6. The 25,000 into 6 will be 1,50,000 rupees. 1,50,000. The application will be received. Again, the shares has been allotted. Then next will be when they transfer, when they receive the cash and allotment. In this entry, the allotment has been done. In the next entry, the allotment money will be received. That is bank account debit to equity share allotment account with the same amount. 1,50,000. 50,000 with the same amount. So next step हमारा इसके बाद क्या आता है? That is basically equity share. They have made the call, first and final call. So equity share, first and final call amount. Equity share, first and final call. Because they have only made one call, it should be debited by equity share, first and final call to equity share capital account. Equity share capital account. How much money? The left has been, that is 10% plus 60%, that is 70%, the left would be 30%. So 25,000 into 3, that is 75,000. Here you made actually a final call, and after that you put a senior call, that is bank account debited. Bank account debited to equity share final and first and final call. That would be with the same amount, that is 75,000. With the same amount, that is 75,000. With the same amount, that will be 75,000. Being the receipt of first and final call. ₹25 lakh divided into 1,50,000 shares or ₹25 each. Out of these, 70,000 equity shares were offered to the public, payable at ₹5 on application, ₹8 on allotment, ₹7 on first call, and ₹5 on second and final call. The public subscribed for 1 lakh equity shares. They have called for 70,000, but the public have subscribed for 1 lakh equity shares. The directors rejected the application for 30,000 shares. They have actually rejected this application. The application being refunded in full, pass the general entries, and also prepare the balance sheet. The full-fledged, this is a whole full-fledged sum for you. Let's start into the sum. So this is books of account for the school limited. With this call limited. The first entry will become the application account, that is bank account debited to equity share application account, bank account debited. Equity share application account. Being ₹1 lakh has been received at ₹5. That is 5 lakh. ₹5 lakh. Being you have actually received 1 lakh equity share application, that is of 5 rupees, that will be 5 lakh rupees. So next entry will be when you actually transfer your application to capital account. So what did you do? Equity share application account debited to equity share capital account, and money was 5 lakh as per the earlier entry, that is 5 lakh, and what you have actually received from 1 lakh, but you allotted 70,000 equity shares. So the entry will be 70,000 into 500, that becomes 3 lakh 50,000, and the rest amount, that will be the rest amount of 1 lakh 50,000 will be refunded back to equity shares to bank account, because they have actually rejected 30,000 equity shares and refunded the amount back to share applicants. That means we have to credit it now to close a particular account. So equity share application account debited with the amount of 5 lakh to equity share capital account with the amount of 3,50,000 to bank account with the amount of 1,50,000. Being transfer of application money on 70,000 equity shares to capital account, and the surplus application money of 30,000 equity shares will be refunded. The next entry will be for the allotment of shares. The next entry is equity share allotment account debited to equity share capital because they have received rupees 8, because they have received rupees 8. So next entry will be for allotment purpose, that is equity share allotment account debited to equity share capital account. The amount is 70,000 into 8, 70,000 at rupees 8, that will be your 5,60,000. As you are now transfer your allotment to capital account, you have to receive the money that will be bank account to equity share allotment. With the same amount, that is 5,60,000. So in these two entries, you have actually made the allotment, and the next you have received the allotment amount, the amount of 5,60,000. After that, you have actually made equity share first call, equity share first call, equity share capital with the amount of 4,90,000. First call and 7, that is 4,90,000. First, the second entry to bank account debited equity first call amount with an entry of 4,90,000. Again, I am repeating, after allotment of money, you have made the first call, that is equity first call amount debited with the amount of 4,90,000, and then you receive that money in this bank account debited to equity share final first call, that is with 4,90,000. Similarly, you will make the second call, that is equity share second and final account debited to equity share capital, that is 70,000 equity share at rupees 5 of 3,50,000. And after that, you will receive the money that will be bank account debited to equity final second and final call, that is of 3,50,000. And next entries we will pass about call in area. Sometimes when the companies makes a call, the shareholders is unable to pay the call money. In that case, the stakeholders become in area and it is called the unpaid call. The company may choose to simply debit the amount from the paid up capital in the balance sheet, but company choose to maintain a call in area account. The following general entry will be passed, that is called in area account debited to share call account, being the call in areas brought into the book. Sometimes what happens, shareholders are not able to pay the money. They have actually not received any money, a company has not received any money from their shareholders, then what they do, they actually make the call in area because it is unpaid call. So simply what company do, they debit the amount that is call in area will be debited with the share call account, and they want to maintain till they receive this money. The next will be, then there are certain times when the call in arrears are paid by shareholders. However, the shareholder will have to pay an interest for time delay. Sometimes what happened, Sometimes what happened, the call in area received later and the shareholder also pay to the interest, that is bank account debited to call in area to interest when they have to pay the interest because they have made the payment late. Next is calls in advance. Sometimes what happens, shareholders pays the call in advance. As we can say, we have made the count for the call in area. In the same cases, we have to make the calls in advance. The excess amount received is a liability for the company. The following entry will be passed, that is bank account debited to call in advance because they have received the money from the shareholders. They have to pass this entry, and the next entry will be calls in advance to share call account, that they have to being called in advance when they just this particular call against your call account. So that is for today. Thank you.